You might hear the finance industry refer to something called the big one. The big one is something that almost happened earlier this year when the US bond market, long bond yield, 30-year bond yield, got over 5%. Now, this will confuse most people, but what a bond yield is telling you is the price you'll have to pay for the US government to borrow money. And the US government, as we know, has around $37 trillion worth of debt that it has to service. The way it services it is to issue new bonds. And if the price of issuing those new bonds goes higher and higher, it's going to get really expensive to service their debt. And the big one is if the US bond market is no longer able to finance the debt because bond yields have gone so high. So in order for that to happen, you'd have to see effectively a run on the US bond market. It's a bit like the bank. It's a run on the bank. It's a confidence issue. It is something that the herd creates in its own head. It's not anything empirical. It's almost an emotional thing where suddenly everybody starts giving up on the US bond market, so other people give up, and before you know where you are, nobody wants to buy a US bond, and bond yields, in order to issue bonds and finance their debt, they're going to have to pay 10%, 20%, which of course is unheard of, and the whole of the US bond market collapses, and the US can't finance its debt, and the US is declared bankrupt. The US dollar goes into a hole, and the whole world falls apart. So the big one is an event in the financial markets which would reprice everything. And maybe this is how an Australian 30-year-old gets into a house in Brighton for 200 grand, because the big one happens. But the big one is effectively a run on the US bond market. Why might there be a run on the US bond market? Because everyone feels there is a price that has to be paid for money printing. But just to put money printing, and that's certainly true, just to put money printing in perspective, the US debt is something like $37 trillion. Since the GFC in 2008, the government, in order to bail out financial institutions, started printing money. And then again in COVID, in order to rescue the financial markets, they printed money, and they printed in total probably around $7 trillion. Now that sounds like an enormous number, but when you put it in perspective with the amount of debt that already exists out there, it is not seismic. So money printing, yes, is an issue which people think there has to be a price to pay. And we did see a moment where Trump blinked on tariffs because bond market yields had gone higher and people started worrying about a collapse in the US bond market. And there are these moments where the market gets into peak fear and this sort of possibility arises, but it's extremely unlikely. And the solution to it, and will always be if the US can't afford to pay their debts, is they'll print more money. So we're not going to see the big one. It's a very low probability event, I'm afraid, for those of you who are 30 years old who want to buy a house in Brighton. It's a very low probability event. The problem with it is, and the reason it generates fear, is the consequences of it are so disastrous. If this happens in our lifetime, we've lived in the wrong lifetime in financial markets. So it's very unlikely to happen. And anyway, as an investor, what you should do is never sell or exit the financial markets in fear of something that hasn't happened yet and is unlikely to happen, just because it would be devastating if it did happen. So you don't sell the markets until it starts to happen, and it hasn't started to happen yet. Don't worry, you'll know about it when it starts to happen. Everyone will be talking about it. We talked about it more so than we have done in decades this year when Trump blinked on tariffs. So the market is capable of fearing it and will cycle in and out of bond market fear. But realistically, it's very unlikely. and you probably don't need to worry about it. And I'm afraid you're not going to be buying a house in Brighton for $200,000.